Hey everyone, happy Thursday, April 4th. It's about 9:45 on the West Coast, and it's time for another market update. A busy week with news this week with the basically the two things we're keeping the closest eye on, and the Fed's keeping the close eye on with their dual mandate. They take a very close look at inflation, and we got PCE inflation last week, and they're keeping a very close eye on the labor market. And this is jobs week. We get all the different jobs reports. So let's take a closer look at that. Starting off with last Friday, we got February's PCE inflation report came out, and as expected, there was not much improvement in those numbers. So let's take a closer look. So as I said, the headline came in a little bit better than expectation. The expectation was 0.4 increase, came in at 0.33. But the way, we replaced a lower number for last year's February number. So that made the year over year jump from 2.433 to 2.451. So a little bit of increase there. And the core, which takes out food and energy prices, which the Fed is, their main target here with everything they're doing, that came in a little bit better expected as well at 0.661. Where the estimate was 0.3. But, we replaced a little bit higher number last month, so we got a little bit of improvement on the year-over-year number from 2.884 to 2.784. But still quite a bit above that 2.0% number they're looking at. And again, looking at some of the breakdowns here, housing, it's coming down a little bit, better, not as low as we know it is in real time, but it's good to see that's making some improvements. And then, we saw energy prices go quite a bit. Gasoline prices jump, which I'm sure we're all aware of, unless you're driving a Tesla. So personal income also jumped up a little bit, 0.3% month over month. Personal spending, pretty big jump of 0.8%. That's not a good one for inflation. The more we're spending, the higher prices are, higher inflation would be. And then here's a really important one. The savings rate dropped to 3.6%. That's the lowest since December 2022. So that's how much money we're all saving, and we're not saving a lot of money. So all kind of things to keep an eye on. We're spending more, don't have savings. That's kind of keeping inflation going. But is that, how are things going to go in the long run? And then speaking of long run, let's take a closer look. Like we talked about, the Fed, what they keep saying is they want to get the core rate, which takes out food and energy, down to 2% on this PCE number. So, again, we're at 2.784 right now. Let's take out last year's March, which we're going to be replacing coming up. That drops us to 2.448. That was a 0.336 number. So, but we got to replace that with, in April, on April 26th, we're going to get the new March numbers. And so that's going to, expectations about 0.23% right now. So that would bring our core year over year number to 2.678. So a little bit of a drop, but not too much, not a lot of gain right there. And again, they want to get it down to this 2% number. So, taking a closer look, how is that going to happen? We got to replace our 2023 outgoing number in this column. We got to, there's going to be some sort of inflation each month, unless it comes in really low. So 0.2, a safe number to put in there. And as you can see, the way this math would work out, we'd only be, in November when they got to that November meeting, we're still above 2.5%, and they want to get down to 2%. So, what would make the Fed pivot? What would make the Fed cut before then, besides, this core PCE getting down that 2% number they keep talking about? And that would be employment. Like I said, there's a dual mandate. They got two different things they got to keep an eye on. One, inflation, and two, jobs. They don't want employment to get too high. So, this week is jobs week. All the important jobs reports really come out. Starting a couple days ago, we got the February JOLTS report, which is jobs openings. Let's take a closer look at that. That came down, definitely coming down from the highs it was about a year and a half ago. It looked like it added a little bit this month. About 8,000 job openings were added, but that's because they made a big negative revision to the previous months of 115,000. So, a little bit up this month, but that was actually, when you look at it closer, it really didn't change much because they had made that negative revision. And then the other thing to keep an eye on here, quits. How often people quit their jobs to go get another job. That's down to the lowest levels outside of the pandemic since 2018. So that shows, workers are thinking, hey, I can't just quit a good job and go find another job. So they're holding on to those jobs. So that's something kind of shows maybe an underlying weakness in the job market if people don't think there's jobs out there for them to get if they quit their current job. Next thing we got was March. That JOLTS report was for February. March, we got the ADP report, employment report, which comes from private, employment from the ADP payrolls. And that came in higher than expected. About 150,000 jobs were expected to be created, came in at 184,000. Again, that shows strength in the labor market. Doesn't really bode well for tomorrow's BLS jobs report. And they also made a positive revision to last month. So that, again, markets didn't really like that much. And then job changers, 10%, job stayers, 5.1% in pay increase. Again, the more we're making, the more we're spending, the more inflation's hanging around. We also got job cuts today, or layoffs for corporates, and those came in a little bit higher than expected. So again, the employment's a mixed bag. We got to keep a really close eye on it because that's really our hope for what the Fed's going to be doing when they go to cut is, basically, the labor market starting to weaken. Speaking of, we also got initial job claims today. They came in a little bit higher than expected. It was at 221,000. Expectations were 213,000, but still really low numbers. So we got to keep an eye on that. But those, job claims at least are staying really low. Then some miscellaneous stuff. So we got CoreLogic. CoreLogic came out with their home price index for February, and that came in at 0.7% increase after a negative 0.1 last month. So real quick turnaround. Now we're back in the positive numbers, so good for home prices. ISM, two different big reports this week. We had the manufacturing one that came out earlier in the week and was surprised on the high side. Showed manufacturing stronger than expected. Markets did not like that because that shows strength in the economy. But then yesterday we got the on the services side, and that came in lower than expected. So that helped us out and kind of offset some of that ADP employment stuff. And then this week we're getting a ton of Fed speakers, Powell, all these different speakers. Some of them talking they still want 3 rate cuts. Some of them talking we only want 1. Really, but the main message they're coming across with is they can be patient, and that's because the job market's so strong. If the job market starts to slip, people start losing their jobs. That's when the Fed will act. So where does that leave us? Average 30-year conventional about 7.06. Last week it was about 6.91. Really, it was this PCE, especially the PCE coming a little bit higher, ADP coming a little higher, and just seeing inflation not making much progress and jobs kind of staying strong. We know the Fed's looking at that and thinking like, hey, we can keep doing what we're doing, basically. We don't have to cut anytime soon. And then important dates coming up tomorrow, very, very important. The BLS jobs, big report for the month of March. Not the best expectations with that, especially the way the BLS has been going, especially with the way the ADP came out. So we'll see how that is going, how that will go off tomorrow. Then the next week we get another CPI or another inflation report, the CPI, another inflation end of that month of April, the PCE like we talked about, and then the Fed will be meeting again on May 1st, and that's when they make their next rate cut, hike, pause announcement, whatever they're going to do. Chances are they're not going to do anything at that meeting unless we get some positive numbers on the job market, which unfortunately means people losing their jobs and things like that. So, everybody, if you need anything at all, please don't hesitate to reach out. Obviously we want rates to come down a little bit more, but keep in mind rates coming down will create more demand, probably make prices go up. So it doesn't mean, a lot of people think, hey, rates coming down making me easier to buy a home. It'll probably make it actually harder. I know that's hard to accept, but the rates coming down will just create so much more demand than we have, and we don't have a lot of inventory still out there, and that will just raise prices. So if anybody needs anything at all, please don't hesitate to reach out. Otherwise, hang in there, and I hope you guys have a great week, and we'll talk soon. Bye, guys.